As a content creator, are you writing off and deducting every single expense that you are legally entitled to? If you think that you are or you are unsure, stick around because I'm going to walk you some of the most common missed deductions by content creators. First, I'm going to cover the obvious expenses. Next, I'm going to show you the ones that a lot of folks forget about. And if you stick around to the end, I'll show you the secret one. And even if you think you are catching them all, you may still want to watch to the end just to be sure. Let's get to it. First, let me cover the most obvious expenses. As creators, we all use the same essential tools to create our content. Lighting, cameras, mics, windshields for the mics, cord, lenses, gimbals, computer software, etc. All of which are tax deductible expenses because they are both ordinary and necessary. Because without them, it's kind of hard to create content. Next, let's talk about how we look on camera. No, we cannot deduct our beauty, but there's still a couple of things that if you're using them, you should be deducting. I'll start with uniforms. This is a tricky one, so please listen carefully. A uniform is defined as the distinctive clothing worn by members of the same organization or body. Now, if it's just you, then you are the organization and the body, literally. But the key word here is distinctive. Distinctive in the sense that it is unique to you, not distinctive because not everyone has it yet. Think merch. For example, my shirt that I'm wearing is considered a uniform because my personal branding is permanently attached to the shirt. Therefore, the cost of the shirt, the cost of the graphic designer, the cost of getting it onto the shirt are all tax deductible. Not to mention the cost of maintaining the shirt, like the laundry or the dry cleaning. So to be clear, the only deductible portion of the clothing you are wearing are those that are considered uniforms because your logo or personal brand is permanently attached to it. And that can be anything you wear: shirts, pants, hats, hoodies, socks, and shoes like the slides made by my guy at the Slides Hustle. And let me address this now because I know it's going to be asked. Since we're talking about how we look on camera, what about makeup? And here's the deal with makeup. It all depends. If using makeup is a part of the content that you create and or you are earning revenue from an affiliate commission or sponsorship from the makeup that you are using as part of your content, then of course it's tax deductible. On the other hand, if you're not earning commissions or getting sponsored, it's a gray area. And it's a gray area because although makeup does have its uses in video production, not all makeup is necessary. And unfortunately, there are no court cases that I found that says that the use of general makeup is okay. So if you want to take that chance, you're doing so at your own risk. Next, where are you creating the content? Do you have an office space like I do? Are you renting out a space just for your shoot? Or are you creating content from home? Because where you are creating content will determine what you can write off. If you're leasing an office space like I am, or if you're renting out spaces only when you create content, then the full amount of what you pay is deductible. However, if you're using your home, you are going to need to do a few more things. First, you will need to measure the square footage of the whole entire home. The length time the width, or vice versa, but length, width, those two measurements. And then measure the square footage of the space used exclusively and regularly to film the content. And once you have those two numbers, you are then going to divide them to get what is called a business use percentage. And that percentage will be used to determine the amount of the actual expenses that you can deduct. For example, let's say that you have 1,000-foot square home and the exclusive and regularly used area for the content is 100 square foot. The business use percentage based on those two numbers would be 10%. Therefore, you can write off 10% of your rent or mortgage interest, the property taxes, the internet, utilities, gas, water, trash, etc. And speaking of where are you creating your content, let's talk about your vehicle. You may not think about it much, but your vehicle takes you to a lot of different locations to create content. And it's also the biggest missed deduction by a lot of entrepreneurs. So in order to use your vehicle as a deduction, you will just need to do one thing: keep track of the miles. You will need to know what were the total miles driven between January 1st and December 31st of that year. And then of those total miles driven, how many of them were for business? This one right here is the one that blows my mind because it's the most missed and it's the one that you don't have to spend money on to deduct. And speaking of missing out on money, now's a great time for me to introduce our sponsor. Did you know that 93% of entrepreneurs estimated that they would run out of money within 18 months? That's scary. And the reason why is that they simply don't know the secrets to protecting their profits. That's why I'm proud to present to you our sponsor, the Protect Your Profits ebook. Simply learn the few key things needed to make sure that you avoid losing tens of thousands of dollars and keep more of your hard-earned money. To get your copy, simply click the link in the show notes below. Now, back to the program. All right, it's time to reveal the secret weapon for tax deductions. Drum roll, it's called depreciation. Depreciation is beautiful because of its flexibility. Depreciation allows you to decide how much of a deduction you want to take, which allows you the flexibility to control your tax return. When you depreciate something, what you are doing is taking the cost of that item that you purchased and spread it across a specific number of years. And the number of years will depend on what it is. So instead of taking the full amount of deduction in a year when you didn't make that much money, you can use depreciation to carry forward some of the cost of the items to future years when you will have some money and thereby have some expenses to offset it. Now, to use depreciation, the items purchased must have a useful life of longer than a year. So items like pens, paper, or just general supplies cannot be depreciated. But the things we talked about earlier, like the cameras, mics, gimbals, computers, your vehicles, and all of those can definitely be depreciated. Let me give you an example. Let's say you purchased a new camera to record some content, and it cost you $3,000 with the lens kit. Well, with depreciation, you can choose to deduct the full $3,000 in the year that you purchased it, or you can spread that deduction across 7 years. So that means you will have a deduction of around $428 for the next 7 years for a purchase you only made once. Isn't that amazing? And there you have it, fam. 10 plus deductions for you as a content creator. If you found anything useful, please make sure that you hit the like button and subscribe. Also, if I left something out, make sure that you leave it in the comments, all right? And one last thing, if you saw something in this video that you didn't deduct on the prior year tax return, please note that you have 3 years to go back and amend the tax return. So that means that you can go back to any tax return within a 3-year period and correct it, which may result in a refund. So go double check. All right, fam, and that's it for me on this one. As always, truly appreciate you being here, especially appreciate you watching it to the very end. Make sure that you go ahead and check out the Protect Your Profits ebook. Again, check the link down below. And until the next time we meet, remember, keep your head to the sky. Peace.
Perfect.